I'm sure this has crossed many of your minds. Stocks or property? It's not going to be a full list. It's just a few things that I could think of that I think is going to help you make a decision. Hey guys, hope you were doing amazing. If you get value from my video, make sure you do me a big favor, like, comment, and subscribe. So should you become a property investor or should you become a stock investor? Should you buy stocks and shares or should you buy property? I'm a property investor. I'm also a stock market investor. So again, I'm going to give you both sides and then you can decide what's the best route for you and your money. So let's start with property. There are a number of benefits to being a property investor. Fundamentally, the wind can't blow and your house will disappear overnight. So essentially, it means it's always going to be there. Number two, capital appreciation. It means if you buy a property in the right location at the right price, there is a very likely chance that the value of that property will increase over time. Now that's a very significant benefit, which I'll come back to later on. So with regards to the stock market, if you buy the right stock, or if you buy a certain stock, it pays a dividend. Now a dividend is a certain amount of money that's paid out by certain companies to its shareholders. Now in a backward sort of way, as a property investor, you get dividends. But our dividends is rent. Think about it this way. If you buy a stock, you benefit from capital appreciation, you benefit from the value of the stock going up, and in some cases, in some companies, you get paid a dividend. In property, you buy a property, you hope for the value to go up, and in its case, you benefit from getting paid every single month. There are some disadvantages of being a property investor over being a stock investor. The barriers to entry are significantly different. Buying a property requires more capital. Getting into the stock market requires significantly less capital. For example, if you were to buy a buy-to-let, typically you'd have to put down a 25% deposit. But if you wanted to buy a stock in a company, it would be significantly less, unless you're buying a Berkshire Hathaway stock, which is around $230,000, but you can buy stock B. One of the other disadvantages of being a property investor is maintenance. You've got to maintain your property. Yes, of course, you can give it to a management company or an estate agent to manage the property on your behalf, but it does require maintenance. With regards to the stock market, the maintenance you've got to do is maybe keep an eye on your investment. But if you're playing a long game, it means you can actually leave your investment there for some time without requiring much maintenance. Stamp duty is payable on both. However, if you do the maths on stamp duty for property, it's significantly higher, whereas stamp duty on stocks is significantly less. One of the reasons why I like investing in the stock market is because typically it's hands-off. It means I can buy a share, do my analysis, and leave that share for the long term. It means I can buy something, hold it for quite some time, and hope and pray, based on my analysis, that the value is going to go up over time, which means I'm not involved in the day-to-day running of the business. One of the issues with investing in the stock market, in my opinion, is that there are multiple factors that can affect your share price. So when I say multiple factors, I'm talking about dozens of issues or factors that can cause the share price to go up or go down. Whereas with property, of course, there are factors that can cause the value of your property to go down. But in stock market investing, in the stock market, there are significantly more. Negative news, positive news, mergers, acquisitions, takeovers, bad behavior from management. However, if I had to pick one, I would pick property investing for one significant reason. Now, many of the things I've mentioned with regards to stock and property, they're quite interchangeable. Yes, some to a greater degree and some to a lesser degree. But there's one significant benefit that you will not be able to get from stock that you can get from property. It's the ability to buy a property, let the value of the property increase, refinance, take out some equity, and use that to purchase more property. You cannot get that with stock market investing. Now, of course, it depends how much you invest in the stock market. If you put £100,000 into Amazon a few years ago, then of course it's going to benefit you. You could take some out and you could reinvest it in something else. But it means you would be liquidating part of your portfolio. Whereas with the property market, it's completely different. You get some equity, the value goes up, you refinance, you take out some, you buy another property, And what you've done there is you've created another opportunity to receive more rent. So which one wins in my opinion? I stand on property. Where do you stand? Hey guys, hope you were amazing. I hope you got some value. Let me know in the comment section which one floats your boat, which one rocks your boat. Stock investing, property investing. Make sure you like, comment, and subscribe. Catch you soon.